For anybody who doesn't know me, my name is Karl Gray. I got involved in this crazy internet money that we call Bitcoin. First interacted with it in 2009. And a friend of mine introduced me to it, and he said, "This is going to be the future." And I said, "Of course it is, everything on the internet is." But he said, no, come over to my house and I'll show you a little bit about this. And I said, okay. So I showed up one night, and my first interaction was my friend playing an online computer game. I can't remember even what the name of it was. But basically he would go around opening doors and unlocking puzzles, and he'd get Bitcoin. Oh, if it was only that easy today. And I think he got something like 5 Bitcoin the night that we were there. So.
Wow.
But I said, well,
it's a lot.
What is this? Is this like, I can't even remember the name of the game now. It's the game that all people play on the internet. They're trolls and
World of Warcraft.
So on. You could actually get World of Warcraft money. So I'm like sitting there looking at my watch saying, "This is what you invited me over." I said, no, you don't understand. This is just a way to get these coins. But here is what Bitcoin is. So we sat up about 3 in the morning talking about it. So I said, okay, well, I'll get some Bitcoin. So got a small little amount of Bitcoin with this help, and I didn't really do anything with it for a while, for about 6 months. My background is in finance. So I was in college entered Trinity College Dublin in 1996. I was 16, I just turned 16, and decided to take a computing course because Ireland was booming. It was the beginning of the Irish Celtic Tiger. Dell, Intel, HP, all these guys were flocking to Ireland because we had a low-cost, agile economy. So we had a lot of high-educated, low-cost employees. Whereas here in America at the time, they had a high-cost, high-cost, less agile environment. So all of these corporations were offshoring. The other thing Ireland had at the time was, and still has, is a fantastic corporate tax situation. So I said, okay, I'll get involved in technology. A friend of mine and myself, we started up a couple of tech startups. But as I started to look at this, the dot-com bubble was starting to form. And I looked at it and I said, okay, the market for technology worldwide at the time was about $2.5 trillion. Then I looked at the Forex market. Does anybody know how much money gets transacted on the Forex market every day?
Trillions.
Every 3 days, $50 trillion gets transacted on the global Forex market, which is the equivalent of the global GDP. So every 3 days, all of the money that's manufactured in the world gets transacted on the Forex. So I decided that's a much bigger market. So instead of trying to sell widgets or program stuff, which I was never very good at, I said, I'm going to get involved in that, because there's lots of money over there. So I got involved in trading and investments, and started my first hedge fund when I was 18. And we saw a 1,000% return in 6 months before the central bank of Ireland shut us down, because we forgot to just get a license. But basically got involved with various different investment companies over the next couple of years. Shorted the dot-com bubble just in time, made some money there. Got involved in property in Europe because there was an enormous property bubble in Ireland and the UK. It's still going on in the UK, it's crashed by about 80% in Ireland. But got involved in that in the early noughties, and then got involved in the commodities bull market after that, precious metals, agricultural products. So that brings us back up to about early 2010. And I had a conversation with a gentleman from Barclays Bank, who was also a Bitcoin fanatic. And he said, Karl, you don't understand. This actually is going to change finance. So how can I do that? So imagine this. We trade euros to dollars every single day. And we have to have an execution point. So a time where we decide to actually move the currency over from euro to dollar. So oftentimes, the rate keeps going up after we've initiated that transaction. So we lose money, we leave money on the table. So what if there's a situation where you could say, I'm going to buy dollars from euro, but I'm going to have an intermediary where I can park my money and I can watch that rate. So that if it keeps going up, I've already moved the money out of dollars, I've committed to the transaction, but I don't actually have to commit to when I fulfill this contract. Light bulb went on in my head. This is potentially big. So in the middle of 2010, I made a sizable investment in Bitcoin. And I've never looked back since. Now, a couple of waivers. I, as I stated earlier, am not a technologist. I have never mined a Bitcoin, or a Litecoin, or any other coin. I wouldn't know how to do it. I'm an investor. So that's where that's how I approach the market. My goal is twofold. That's why I attend these meetings all over the world quite regularly. And I have two goals. The first is to get girls to come to these meetings. As you can see, I haven't been successful yet. The second is to get Wall Street and the City of London and Frankfurt and Shanghai and all of these other major financial hubs involved in Bitcoin. Okay. Now, when I use the phrase Bitcoin, I'm generally referring to cryptocurrency in general. So why would I want those terrible, naughty people on Wall Street to get involved in cryptocurrency? Two reasons. First, name recognition. Imagine if Deutsche Bank or Credit Suisse or one of these guys turned around next week and said, hey, we've purchased $500 million worth of Bitcoin. Or Litecoin, or whatever. That would be pretty headline news. What do you think would happen after that? The price would go up.
Satoshi would come out. Sweet, I'm right here.
The price would go up, but also, if Deutsche Bank did that, Credit Suisse is probably going to do it.
Yeah.
And Barclays Bank is probably going to do it. Okay? And JP Morgan Chase are going to do it. And Goldman Sachs, heaven forbid, might even do it. Okay? But it's going to take somebody to cross that line. Now, a lot of people don't know, JP Morgan Chase, on its proprietary trading desk, has a team that trades Bitcoin. JP Morgan Chase has a Bitcoin app, an in-house app that they have developed. I've used it, I've seen them use it. They are trading in Bitcoin right now. Now, it's very, very small amounts because they are just getting up to speed with the market. Never listen to what a central bank says. Always watch what a central bank does. Okay? So a lot of news out of China lately. Oh, Bitcoin, we're banning Bitcoin, we're banning Bitcoin. Log into the BBC every day. Bitcoin has been banned in China. Well, first question, what does that mean? How do you ban a cryptocurrency? Secondly, why haven't they actually done it? What was supposed to have happened on, was it April 15th or 16th?
Was it the big Beijing Bitcoin meetup with like 300 people 2 weeks after that? There were pictures.
Well, the People's Bank of China had come out and they'd said, we're shutting down Bitcoin on the 15th or 16th or something like that. And the 15th or 16th came and went. Nothing.
Actually, the bank accounts for the exchanges were shut down.
Yeah.
Well,
Yeah.
They weren't actually shut down.
they just left it.
They were told if you don't cease trading, there's going to be punitive action taken. So a lot of it was very voluntary, but nobody was actually forced to close their account. And Bobby Lee at BTC China, I was talking with him a couple of nights ago, and he still has his account there. And they're in negotiation. Now, going back to my comment of don't listen to what the banks say, watch what they do. ICBC, the International Commercial Bank of China, largest bank in China, has a bigger balance sheet than the People's Bank of China, are buying Bitcoin and Litecoin and many other coins as fast as they can get. I had a meeting with them in London about a month ago. Actually, I'll go back. In January, I had a meeting with them in London. And they said, Carl, you're going to hear some negative news come out of China regarding Bitcoin. Okay, what do you recommend? They said, we recommend you keep buying Bitcoin. Because the news is going to be just that. It's going to be news. There's going to be a lot of FUD, fear, uncertainty, and doubt. But we're going to continue to buy Bitcoin. Now, of course, they have a big advantage. They can buy Bitcoin for their bank in China or in Japan or in South Africa or wherever they want, because they have holdings all over the world. But the major point being, there's a lot of talk going around regarding Bitcoin. Now, if you're a technologist, which you're probably all far better technologists than I am, you know that it's practically impossible for a government to ban Bitcoin, right? Because the only way you can do it is to stop the internet. But I think what we're seeing right now is that the same thing happened in the traditional finance market about 100 years ago. Companies started to introduce these derivative type products, short selling, early derivatives, and a lot of the central banks around the world came out and said, hey, wait a minute, we can't control these, we don't know what they are, and so they put a lot of regulation in place. In fact, one of the reasons why the Federal Reserve was brought out here in the United States was to do with an explosion in financial markets in 1907 that were caused by derivative products. So the federal government came out and they said, okay, we're going to try and put the brakes on this, just to slow it down, not to stop it. And I think the same thing is what's happening today with financial products, crypto financial. So, where do I see the future regarding cryptocurrency? Crypto is going to become mainstream over the next 24 to 36 months. Now, 6 months ago, I might have said, actually, it's probably going to be before the end of 2014, but we had a major price correction, thank goodness, and everybody, it kind of lost its sex appeal a little bit, because all of a sudden, every day you'd log in and you'd see, whoa, it doubled in price again, and it was getting just huge news all over the place. Which was great, because that was the very, very, very beginning of the awareness phase. Now, some people think we've already passed the awareness phase in cryptocurrency. And my answer would be, look how many people are in this room. If there were 1,000 people in this room, then yes, we would be in the awareness phase head on. We are just at the very, very, very beginning. Why has Bitcoin collapsed? Not collapsed, but corrected over the last 3-4 months?
Higher rate of merchant adoption than user consumer adoption.
What was that? Higher rate of which?
A higher rate of merchant adoption versus consumer adoption.
Why does it do that?
I have a really short, concise answer that some of you might be aware of. People are selling.
Yeah.
Okay? That's why prices go down. Now, why were people selling? Well, a lot of people bought Bitcoin in 2012 when it was sub $100 or sub $50. And all of a sudden it shot up to $1,200. Now, if you can find another financial product that gave that kind of return from 2013 to 2014, then I'll be surprised. So a lot of people said, hey, you know what, this is great. I am going to retire. I'm going to buy that Maserati I always wanted. And so they sold. One of the hardest things for investors to do is take their profits. So there was a lot of selling for profit taking. There was also a big tax liability. A lot of people all of a sudden said, wow, I just made 10 times as much money for Bitcoin as I did for my career over the last couple of years. I got to figure out how to pay my taxes. And then there was all the traditional, well, I've got money now, so I want to spend it. A lot of retailers do not take Bitcoin, so they have to convert it into fiat in order to buy a car or a TV or whatever. So there was massive buying pressure throughout 2012, 2013. That rolled over into selling pressure the first part of this year. Now, I anticipated that, and I'm not ashamed to admit, I should be maybe in this room, I sold a lot of Bitcoin at the end of 2013.
Shame on you.
Sorry. But, in my defense, I bought it all back. for a third of the cost.
There you go.
So, you know,
I think another thing is that the rise of cryptocurrency and Bitcoin has created a nascent industry of tons of people who are now employed in the space.
that's right.
And so now, so these companies have been formed with cheap cryptocurrency, and now they have expensive cryptocurrency to fund their organizations.
That's right.
And yet they don't have for-profit models yet. They just are building their infrastructure, and so that money gets converted all over the place.
That's exactly right. And another thing, for example, hands up if you are involved in some way in a crypto-based company. Okay, keep your hands up just for a second. Okay, so
Get your hand up, Brock.
yeah, Brock, put your hand up. So the majority of the people in this room are actually in the Bitcoin service industry. There's probably more people servicing the industry in this room than there are consuming from the industry. So that kind of goes along with what Theron was saying. But that's okay, that's normal, and that's healthy. The service industry has to grow before people can consume from it, right? So that's another big part of it. So people are taking those Bitcoins that have appreciated thousands of percentage points, and they're sinking them into companies. And I'm guilty of that too. I started the world's first, co-founded the world's first cryptocurrency-based crowdfunding website, StartJoin. So if you guys have any projects that you want to get funded, go on startjoin.com, list them there. It works exactly like Kickstarter, except we don't block 93% of submissions. We pretty much allow everything on there that's legal in at least one country. So there's a lot of actual reasons. So every once in a while I'll go on BTCE or one of the other sites and I'll look at the troll box. People are like, what's going on? Why is Bitcoin going down?
All the news is good. Why?
It's like, well, because it's a market, right? It's an actual free market. And so when people are buying, the price will go up. When people are selling, the price goes down. So literally when I post on Facebook or Twitter or whatever, people selling, you know, it's a little bit facetious, but that's the reason. That's why. Now, another topic I want to talk about. Bitcoin versus gold. This is a very, very controversial topic. As I mentioned earlier, in a previous part of my career, I was involved in commodities trading. I got involved in buying gold and silver back in 2003 and rode that market as high as I could go. I love gold, I love silver. They're great, they're wonderful. They are not competition to Bitcoin for a variety of reasons. And Bitcoin is not competition to gold or silver. One of the reasons why I turned from a gold bull to a gold bear was about 2011, gold took on this sacrosanct status. You would go and you would talk to gold bugs, and they would be like, gold is so wonderful. I love gold. Gold is holy. It's brilliant. We love gold.
That's my wife.
Now, then along came Bitcoin, and gold bugs got angry because two things happened. Bitcoin became really popular, and gold corrected. Now, these people had waited 30 years for this gold bull market to come along, and now all of a sudden, after 12 years, it was over. And they're thinking, am I going to have to wait 30 years? So they were upset about that. Listen, there's this big conversation going on about intrinsic value. Gold has intrinsic value, Bitcoin does not. Well, let's face it. What's your name?
Tyler.
Tyler, if I put you on a desert island with a well, an unlimited supply of fresh water, a metric ton of gold, and a hard drive with 100,000 Bitcoin on it, and you knew you had no prospect of ever getting saved or escaping, which one is the most valuable?
The well.
And that's the thing. Intrinsic value is subjective.
Wrong answer.
Right? People say, but Bitcoin's not backed by anything. Well, what's gold backed by? And then they say, well, 5,000 years of history. I say, well, that doesn't make sense. So are you saying in 5,000 years Bitcoin will have the exact same intrinsic value as gold? No. Okay, so history's out the window. So what's it backed by? Well, It can conduct electricity. have yet to meet the gold investor who buys gold because it conducts electricity. Now, I met a lot of gold bugs, but it is not purchased by investors because it conducts electricity. I don't care what they say. People buy gold because of what it can do. Gold is a hedge against inflation. It has a great track record of hedging against inflation. Bitcoin, I would submit, is not a hedge against inflation. The reason I know that is because Bitcoin has not tracked to real inflation over the past 3 years. It's not a track against inflation. But I'll tell you what Bitcoin is, which is just as valuable, maybe even more. Bitcoin is a hedge against the complete collapse of a financial system in a country. That's why people in Cyprus bought a lot of Bitcoin. That's why Ukraine has gone from being like 28th on the list of Bitcoin ownership to 7th in the last 3 months. People buy Bitcoin because their banks no longer work, or because they're told they can only take $100 out of the ATM, or they can only leave the country for a certain amount of time, or take so much with them. Venezuela. I have a company in Venezuela that mines Bitcoin. Why Venezuela? Because we can mine Bitcoin for 1/20th of a cent per kilowatt hour.
Wow.
So that's an 80th of the cost here in the United States. Granted, it's very dangerous and very volatile country, but risk-reward. So the whole gold, next time somebody says to you, well, Bitcoin is a mirage like Warren Buffett, well, I'll say, okay, Warren, but the richest man in China is buying Bitcoin. Chinese economy is going up, American economy is going down. Might want to listen to the Chinese guy. So, gold versus Bitcoin, it's not an argument. It's not one or the other. I own both. I buy both regularly. I'm not selling at the moment either. I buy them for different purposes. How are we doing on time now?
Take as much time as you want.
Okay.
Yeah.
So, going back to the gold Bitcoin conversation, I don't think they're competitors. I think they share one feature, and that is utility. Now, utility is a very fancy economic term for what can you do with something? What usefulness does it have? Gold, okay, it's a hedge against inflation. It conducts electricity. It's very malleable. You can stretch an ounce of gold over a very, very far distance.
You get women in needs. In a heartbeat.
Absolutely. That's right. If we were talking about gold here, there would be more
There would
women.
be girls.
That's true.
It's true. But utility, it's all about utility. So what can you do with Bitcoin? Well, imagine I wanted to take $1 million and leave the United States and go to Iceland. If I wanted to take $1 million worth of gold, that'd be quite a lot of gold. I'd have to organize transfers and airplanes, and it'd be very, very expensive. Logistically, just big operation. If I wanted to take $1 million worth of Bitcoin, just stick it on a thumb drive, stick it on a pocket, get on a plane. So that kind of utility is quite valuable. Now imagine your Apple computers, and you have $36 billion outside of the United States that you want to use within the United States without converting it into fiat currency. The only way you can do it, if you use dollars, you're going to get taxed on it. The minute it hits a US-based account, you're going to get taxed on it, up to 40%. If you utilize something like Bitcoin, you can move it here, you can utilize it, and then you can move it somewhere else. Enormous utility. Non-profits. So micro-lending, microfinance, one of the biggest, fastest growing industries in the world from a financial standpoint. They deal in loans that are in $100 to $500 range typically. oftentimes these organizations will have a 20 to 30% cost burden on moving this money around. Because they're dealing, so they get, they're paying wire fees, they're paying foreign exchange premiums. So all of this, all the overhead eats away at getting the money into the hands of the person that's actually going to be productive with it. Now imagine if you go to these organizations, which I have done over the last 3 months, and said, how about you do that for free, instantly and securely? All of them are very excited about it. There's a very large nonprofit microfinance entity here in the state of Utah that is in the process of using Bitcoin for all of their wire transfers. So that is going to be an enormous sector. One of the things that I'm doing right now is I'm in conversations with governments in Africa. I think Africa is China is going to be the next great economy. This will be the Chinese century. Now, a lot of economists will say, well, no, China's got a huge property bubble. So, well, China's got a one-child policy, so it doesn't matter. As Jim Rogers always says, look at the United States. 150 years ago, we had no religious freedom. We had slavery. Asian people couldn't own property. And we had a civil war.
None of what's happening.
And during the space of that, we had 12 depressions. Depressions, not recessions, depressions. Guess what? We became the biggest economy the world's ever known. So economic headwind does not mean it won't happen. Another fallacy that people will say is, well, China can never surpass the United States because they need us. I'm sorry if you're an American, but it's not 1984. China is not a third world country anymore. China's largest trade partner is the EMU, the European Monetary Union. Their fastest growing trade partner is Africa. There's a lot of people in the world that want to buy stuff from China. And let's face it, if the United States has an economic downturn, are people going to say, oh, I'm not going to buy those cheap Chinese goods anymore, I'm going to start buying these really expensive American goods? When the 2008 collapse happened, the very first equity that I purchased, would anybody like to guess? I'll give you a clue, it involves food, allegedly. What's that?
Rice.
Nope.
Corn, soybean.
No, we're talking equity, so shares. McDonald's. And that went up 400%. Because what do people do when times get tough? They have to tighten their belts, they have to count their pennies. So I bought McDonald's, Burger King, Coca-Cola, all the cheap stuff that people, high carb, high energy food, that's cheap. So if the economy here slows down, people are going to not slow down their consumption of cheap Chinese goods, they're going to increase their consumption of cheap Chinese goods. Where are we headed as far as a global economy? 10 years ago, the first time that I purchased a property here in the United States, gas was about $1.40 a gallon. Does anybody know how much a gallon of gas is now?
350, 380.
Yeah, here in Utah it's quite cheap. Go to California, $4.50. New York, almost $5. That's all monetary inflation. You print more money, you get higher prices. Now, people say, but there's no inflation. And the way we know that there's no inflation is if you look at the yield on the 10-year bond, it's quite low. So bond yields should reflect monetary principles, monetary policies. Now, something just happened this past week. As you may know, we're in the middle of Cold War 2.0. We have the United States in the West and Russia and Asia. And they're lining up against each other again. But they're not going to fire missiles or stare at each other across the DMZ anymore because that's expensive. Much cheaper way, just attack each other's currency and each other's financial markets. So Russia this last week just sold $20 billion of US treasuries in a single day. Now, that should have sent the yield on the 10-year note about 40 basis points higher. It went down. Because a buyer in Belgium decided that he wanted to buy those $20 billion. And this guy pops up every time somebody sells large amounts of bonds. And everyone said, well, who is this guy? And then WikiLeaks released that it was actually the Fed buying through an overseas account, buying their own debt. So that's what we're going to keep doing. We're going to keep buying our own debt, and everybody's doing it. The EU is about to issue huge amounts of quantitative easing this summer, and that's the goal. Okay, you got to devalue your currency to stay competitive. It's a race to the bottom. Okay, imagine you're in a marketplace and you're selling hamburgers. Right, there's 5 restaurants, and one of the restaurants decides to drop its price 25%. If you're all selling comparable hamburgers, you've got to drop your price too, or you're going to go out of business. That's what currencies are doing now. They're all dropping their value comparative to try and boost exports. The most famous example recently was Japan, who devalued their currency by about 50% in order to get their stock market to go up. Anyone who follows me on Facebook probably knows that I said, hey, go out and buy the Nikkei. It's about to double. And in the space of 6 months, it did double. But unfortunately, you can only do that for so long because the rate of return is a lot slower. So how does that impact Bitcoin? Well, the United States has the world reserve currency, right? So people have to buy oil and a lot of food and other commodities in dollars because for a long time it was considered the only viable world reserve currency. So that's kind of protects us. We're able to export our inflation overseas. Unfortunately, Russia and China have decided they're going to start trading with each other directly in their own currencies. And then Australia decided they wanted to get in on that. A lot of Asia is doing the same thing. Did anyone see the big announcement in Africa by Chinese government this last week? They're going to build this huge
train.
Yeah, they're going to build this huge train.
Transcontinental.
Yeah.
Basically, it translates the existing rail infrastructure of the Chinese partnership.
So the Chinese basically going to build a transcontinental railroad in Africa. And they're doing it for a very competitive price. Because China is going around winning friends and influencing people. They're making good deals. They're paying good money. China recognizes that it needs a lot of natural resources, oil, gas, copper, gold, all of that. It's going to get it from Africa. It's doing it by making good deals with Africa. So Africa, over the course of this century, is going to say, okay, do I want to be good friends with the rising, fastest growing economy in the world? Or do I want to be friends with the West, who are declining? Well, it's not a difficult choice. So, more and more the world is moving away from the dollar as a reserve currency. That means our ability to use our national credit card is getting smaller and smaller. Less places are accepting it. It used to be in Europe, most places would